You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Tuesday, September 11th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Tuesday. First thing to know is China requests WTO permission for trade sanctions on the U.S. In the latest chapter of the U.S.-China trade dispute, Beijing will ask the World Trade Organization for permission to impose sanctions on the U.S. According to a WTO meeting agenda released on Tuesday, China will officially place the request next week as part of a dispute over U.S. dumping duties that China started in 2013. Beijing appears to be following the WTO rulebook in response to U.S. President Donald Trump's remarks that he was ready to impose an additional $467 billion in tariffs on Chinese goods. The total figure essentially covers all of Chinese imports to the U.S. China had stated that it would retaliate with approximately $60 billion in tariffs on U.S. goods. The second thing to know today is 2-year Treasury yields hover near decade high. U.S. Treasury yields continued to climb higher on Tuesday, with yield on the 2-year hitting 2.736%, its highest level since July 2008. The move came off the back of last Friday's employment report, which showed wage inflation accelerating more than expected, backing the Federal Reserve's plan to gradually increase interest rates. While the only job openings and labor turnover survey, JOLTS, is scheduled for release on Tuesday, investors await the Wednesday publication of the Fed Beige Book, which provides details on economic conditions of the 12 Fed districts, along with data on factory gate inflation. The third thing to know today is U.S. futures retreat on China action. U.S. futures extended losses as news broke that China was not backing down in its trade dispute, planning to take the case to the WTO. With little on Tuesday's economic agenda, investors will continue to watch developments over trade tensions between the world's 2 largest economies. Fourth thing to know, emerging markets pause before central bank flood. U.S. equities and emerging markets took pause on Tuesday while their currencies stabilized ahead of monetary policy decisions from several of the most hard-hit countries. Argentina kicks off Tuesday with its monetary policy meeting, the first since an emergency rate hike to 60% last month, while Turkey and Russia will follow on Thursday and Friday. All that comes ahead of the Federal Reserve's own meeting later this month, at which the U.S. Central Bank is expected to maintain its tightening path. Fifth thing to know today is oil prices rise as Washington looks to offset supply reduction from Iran sanctions. Oil prices rose on Tuesday as U.S. sanctions squeezed Iran crude exports, tightening global supply despite efforts by Washington to get other producers to increase output. U.S. crude oil futures gained 0.28% to $67.75 at 6:13 a.m. Eastern Time, while Brent oil traded up 0.74% to $77.94. U.S. Energy Secretary Rick Perry met Saudi Energy Minister Khalid al-Faleh on Monday in Washington as the Trump administration encourages big oil-producing countries to keep output high in an effort to lower prices. Perry will meet with Russian Energy Minister Alexander Novak on Thursday in Moscow. Our second story today is from CNBC.com. Russia and China are looking at launching joint projects worth more than $100 billion. A group composed of Russian and Chinese businesses is considering 73 joint investment projects, cumulatively worth more than $100 billion, according to a Tuesday statement. Cooperation between China and Russia is an issue of global importance as both nations try to achieve economic stability despite the pain of U.S. penalties. Sanctions against Russia and an escalating tariff war with China are at issue. Beijing and Moscow have had a rocky relationship, but the two governments have publicly sought closer ties in recent years. The group overseeing the potential billions in investment is the Russian-Chinese Business Advisory Committee, which held an annual meeting this week during the Eastern Economic Forum in Vladivostok, Russia. Our final story today is from CNBC.com. Nike is trading back up to its pre-Kaepernick sell-off level, and here's the next move. Nike shares have been on a roller coaster since the company aired its new ad with controversial ex-NFL star Colin Kaepernick. Despite the volatility, some market watchers advise investors to keep riding the stock. The bottom line is that Nike remains in an uptrend. Anytime you have some polarizing news like this, I think it's a good reminder to know that the company is different from the stock. The stock itself fell about 5.5% from its August high to last week's low, which was more than the major averages, but not out of character for Nike. Frank Capillari, chief market technician at Instinet, said on Monday on CNBC's Trading Nation. Capillari pointed to the stock's solid uptrend in place for the last year and noted a pattern in Nike's declines. 6 separate times when the shares fell more than 6%, those drops led to higher lows and eventually buying opportunities. That led him to be bullish at this juncture. And that, ladies and gentlemen, is news you can use for today, Tuesday, September 11th, 2018, your options news rundown. I'm Dan Passarelli, trade smart, and have a great day.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.